Hey guys, so in this video, I just want to share my heart on what I've been observing in the economy and how should this affect you. If you are a long-term investor, you are someone who wants to position 4 or 5 years into the future, or someone who wants to buy based on the opportunities right now. What should long-term investors do in this type of economy? What should long-term investors do in this type of scenario? And what should traders do as well? So if you want to know more about that, in something that's very raw, something that's very different, something that's outside the house also, check this video out. Hey guys, this is a very interesting video because I rarely do videos outside. I think it was just a couple of videos over the past months that I posted videos of me outside. But I had to go out today, get some stuff, bought some meds, did some errands also. Just wanted to share a couple of things that I hope it benefits you, things that I've observed based on what's happening in the economy as a whole. So over the past months, I've seen how things develop from the ECQ. Even before the ECQ, then we started to go to MECQ to GCQ, and then now things are starting to reopen again. But here's one thing I'd like you guys to get, especially for those who are stock market investors, especially for those who are starting. I don't think that we're gonna go back to where the economy was in 2019. It will take a longer time for us to go back to those levels. We're not there yet, no matter how we start to reopen, restart things. I'm saying this because right now, August 2020, we're better off already compared to April, where everything was literally shut down. The whole economy was shut down in April with just a basic set of industries functioning at that time. But 4 months over, we have a spillover already. There are businesses that are still closed. There are businesses that are still struggling. There are businesses that are open, but their level of sales, their level of revenue, if the revenue is nowhere where it was before, it means that they're not expanding. It also means that they're not hiring more people. It also means that people are not actually spending. When I was looking at my budget, I saw that, hey, I was saving a lot of money during this particular lockdown. I wasn't spending as much. There were a lot of things that I would have spent on during times where back way before this pandemic started. However, the economy is made up of transactions, meaning one man's earning is another man's spending. So if I'm not spending, yung dating pinagagastusan ko, they're not earning also. And it's a ripple effect in a lot of things. And you notice this, and I've been saying this over and over in a lot of the videos, that anything that's services related na may physical touch, or anything na mass gathering related, won't really do so well in the same way anything that's travel related. But it's not just that eh. If you watched the video yesterday, I mentioned that this August, they're gonna reveal our GDP results. And that is drilling down on the second quarter figures of our GDP. It will factor in that we would have contracted. By the time I'm making this video, I don't know what the results are yet, but there's one thing that I do know. They will confirm that we are in a recession. They will confirm that we have 2 straight quarters of contraction. How big is it? How large is it? How bad is it? We don't know. But there's one thing I do know. If the economy drops more than expected, you can't expect the market to go lower. That's why you've seen it also that there's not a lot of volume. There's not a lot of value turnover. Foreigners have been going out for the main reason that people are waiting to see what's gonna happen. And Wilcon also just released their earnings for the second quarter, 90+% decline. And I think that's gonna be a staple for a lot of the companies, especially for the second quarter. But again, things are getting back. We are starting to reopen. From a 90% shutdown economy, things are starting to liven up. But we're not gonna go back to where it was. There are vaccines right now that are coming out. There are cures right now that are coming out, but it still has to be mass tested because we don't know what the effects of it will be over the next few months or over the next few years. What are the effects on people? How does it affect people? It might be even worse on people if they actually try that, and we don't have that yet. But if suddenly the uptake of that, the production of that will be very good, the acceptance of that will be very fast, and then the distribution will be very good also, and the whole world suddenly feels better that they can already go out because a cure and a vaccine is there already, then I think there will be spending. Then I think everything that I said about tourism, about spending, about eating out, suddenly will have an outburst still. We're gonna see that happen. So what I'm trying to say is this. In this type of economy that we have, there's still ways for you to be able to position. There's still ways for you to be able to earn. It does not mean that the economy is bad, you won't come out winning. It may have seemed that I started out that di masyado optimistic yung sinasabi kong numbers, because at the end of the day, remittances are down, there will be defaults, businesses are closing, unemployment is up, a lot of the economic data is not so good. But recessions do happen. So does recoveries. I'm saying this to people who have a very, very, very long term horizon. Meaning, if you believe that a recovery will happen regardless if a vaccine comes in the next year or 2 years, you can still make money. Why? You position yourself in stocks that are massively down. Valuations wise, they're very, very cheap. But you're not buying them for what they are today, but you are buying them for the recovery that they will have 2, 3, 4, 5 years into the future. That if you believe that this fast food chain, this casual dining chain, this mall, this bank, this airline will go back later on, then you position now, then you just wait. However, that's the hard part also, because the waiting time is something that you don't know eh. And in between also, there will be a series also of bad economic results. Meaning bad economic results, uncertainty, there will be volatility. So if you are a long-term investor now and you want to come in right now, you better buckle up, because there will still be volatility. There will be chances that the market may even go lower. There will be chances that it could still drop down. There will be chances that you can see bigger drops, especially if the figures are not so good. I think one of the things that's different right now is yung uncertainty eh. When things were dropping in March, April, we did not know what was happening yet. We don't know how bad it would be. But 3 months, 4 months in, we just know it's bad. But somehow, no, the uncertainty is starting to dwindle down. If there's one thing I do know about investing and about trading is investors, and I've been saying this all the time, investors don't like uncertainty. Better that they know what they're getting into. Better they know already how bad it is, so that it's easier for them to compute what they're supposed to do. It's easier for them to be able to make some computations and make some projections, make some forecasts on how things could possibly be. So August 2020, I believe some of the uncertainty is out of the picture. August 2020 though, we don't know how big these cases will be. But what we do know also is that the more we start to open, there will be still more and more infections. Back to the stock market. So if you believe that there are some stocks that are undervalued today, that are just battered because of the current economic situation today, because of the current pandemic, but you believe 4 or 5 years later they're gonna be okay, by all means study them. By all means deploy capital on them. But what's very, very important here is this: you need to have firm conviction that you know your battle plan, you know the reason why you are buying it, you know the reason why you're holding on to it, you know the reason why you are buying it right now, so that if you buy it right now, then it starts to decline 10, 15, 20% later on, you already have a strategic plan. Also, are you gonna add some more? Are you gonna sell already? You're gonna cut already? Or you're just gonna hold it? You're just gonna stay? Because at the end of the day, and I've been saying this all the time, the stock market is all about conviction. The stock market is all about you deploying capital to something that you know and you know and you know, based on what you've understood, will do very, very well. So that's my take for people who just want to invest and want to position for the long term. Look for the ones that are battered today but will recover in the future, because this pandemic also, like any other pandemic and like any other financial recession, like any other crisis, will also end. Those stocks that dropped more than 50% and you were able to pick it up, I think those were very, very, very good deals also. That the rules in trading the market never change. At the height of maximum fear, that's where still the greatest discounts will lie. But you don't just buy them because everything is fearful. You buy them because you've done prudent research also, that it hit your parameters. And I keep saying this all the time, it's never about what stock you're buying, but it's the rules on why you're buying it. It's the rules on why it's so important for you to start to come in on the stock that you're positioning into, because that's more important. The rules, the parameters, the strategies on why you're buying it is more important. It doesn't matter if it's blue chip, it doesn't matter if it's basura, it will always go back to what your rules are. What will cause you to buy, what will cause you to sell, what will cause you to hold, what will cause you to cut, what will cause you to take profits. Because without that, it will just be whatever news that you will see, whatever posts that you will see, you will just buy it. And I think it's time that as investors, as people, especially for those who are starting, that you start to transcend, that you start it under the right footing. You cannot make large sums of money relying on what other people are telling you. The best way for you to be able to do it is to roll up your sleeve, learn. And it doesn't even matter if you're just buying 1 stock, 2 stocks, 3 stocks. It doesn't matter. What matters is the strategy and the conviction that you have into it. Now, I also want to address the people who want to position not for 5 years from now, but you're asking, Marvin, what about companies that might still do well in this era, in this pandemic? I'm just gonna run through them right now, but I've made so many videos about it. It's still the same. The utilities, the telcos, anything internet related, and anything essentials related, from the supermarkets to the items that they buy in the supermarkets that they use at home. Other than that, I don't think the other industries will thrive as well here. So if you are an investor, 2 options. So buy the ones that are doing well now, or you buy the ones that will do well when there's a recovery. I think that's how you can go about it as an investor. I think that's how you can go about it if you want to segment and still be positioned at this time. But please remember this, and I'll say this over and over. If you want to be positioned at this time, you have to take into consideration that volatility will happen. You have to take into consideration that anytime bad economic data will come out, anytime that there's uncertainty, volatility will happen. It could bring markets lower, and you must be prepared. You need to know what you're supposed to do at this time, at this era, that if it drops, are you cutting or are you holding? If it drops, are you selling or are you adding more? Because that's more important. Above and beyond the ticker, above and beyond the name of the stock, above and beyond the price, above and beyond the momentum, that's more important. So I've addressed the ones that are long-term investors that are positioning for 4 or 5 years from now. I'm addressing investors also that want to come in based on companies that are doing well. If you're a quick trader, same thing. The rules for support and resistance does not change. If you're a position trader, the rules for trend following does not change. Meaning, as long as that stock is still in a downtrend, then you avoid it. You just exercise patience. You stockpile on cash right now, but when they start to reverse, dun mo damihan, dun mo puntahan. Kasi it does not make sense if you're a position trader to buy something while it's in a downtrend. You wait. You exercise patience, you build on that cash, and then once you see it start to reverse, please remember, when I say reverse, you're not looking for the bottom, you're not waiting for it to pick, to decide, to forecast that this will be the lowest point, that this is the lowest point of the market. No. Position trading is not about trying to look for the lowest point. Position trading is trying to look for the reversals. And you please backtrack all of the videos about technical analysis, downtrend reversals that I've had. For those who read the books and attended the seminars, every time a stock reverses, you're not buying it at the lowest point, but you're buying it already when there's enough buyers that are willing to buy it at a much higher price, and there will be key indicators already in the chart that are showing you that, hey, it's already breaking out, it's already getting out of this downtrend. And those are the things that you have to look for as a position trader. But while the market as a whole is still not out yet of that downtrend, then either you stay away, you build that cash position so that when it starts to get better, you have enough firepower to be able to help you to position, that you have enough firepower also to allow you to add to that so that you can start winning. And that's all I want naman eh. The reason why I just keep making videos and the reason why I just keep sharing my thoughts is I just want more and more of you guys to win. I just want more and more of you guys to know what you're getting into, and eventually if you know what you're getting into, it will allow you to have the experience to be able to trade the markets well, to be able to trade it skillfully. Lastly, for quick traders, same thing, support and resistance. Stocks that may break down. I don't know how corporate disclosures will be. I don't know also how the GDP will be by the time they disclose it this August. But should you see stocks go down and break down, then you just stay away from them. You wait until they hit those support levels and they start to bounce. But there's one thing that I just want you to take note also. Please remember this. Volumes are not there. So for investors, you're okay to buy even if volumes are not there because you have a longer waiting period. In the same way also as a position trader, position traders can somehow tolerate that. For quick traders though, for people who want to trade the volatility, for people that like support and resistance like me, volume is so important, value turnover is so important. Please don't buy stocks without any volume in it. Please don't buy stocks without strong value turnovers, because in technical analysis, in trading, price action is amazing, but volume also is everything. Volume helps you decipher how legit those moves are. Volumes help you decipher if those movements in the market are something that has legs in it. And I've been saying this over and over. The past weeks, our value turnover has been very, very low. And that's why I've been talking a lot about US stocks. I've been talking a lot about digital currencies and other avenues on how you can also invest, because if trading does not make sense for you because of weaker volume, you have more opportunities also outside. And that's what I think the internet has done. If you want to be a quick trader, support and resistance does not change it. The rules of support and resistance, the principles of support and resistance does not change, regardless if you're trading Philippine stocks, US stocks, Singapore stocks, cryptocurrencies, Forex. If you know them by heart, then you can trade any market in the world. So those are my options. If you are a quick trader, just look for the ones in the Philippines that have volume, hit support, bounces, but while they are not yet at the support, if they're breaking down or if they're closer to the resistance, by all means, please exercise patience. Don't do anything. You don't have to trade all the time. You only have to trade what makes sense for you. And just to share how I normally do it, I actually spend more time studying, researching, doing my due diligence before I do anything else. I do not buy a stock without researching. For every 1 hour that I spend researching, sometimes wala akong binibili the next day because I only buy when it makes sense for me. I only buy when it works for me. But if I find something that I like, by all means, I execute very, very fast. And baka you've heard this so many times. I spend more time studying, I execute very, very fast, and I spend less time monitoring. The money in the stock market is never about how much minutes you monitor, how many minutes you press that refresh button, how many minutes you keep on looking if the price is moving that way. It's not there. The money is in the allocation, but the allocation comes from the strategy. The money is in the positioning, but the positioning comes from research, comes from strategy, comes from the due diligence that you put into it. So there, I'm not a fortune teller, I'm not a forecaster, I don't know how it will be, and I'm just saying it as it is. That we are not where everyone wanted it to be for 2020, but it does not mean that you cannot come out on top. It's about knowing what your plan is, knowing what your time horizon is, knowing the rules for the stocks that you want to buy, because that's the most important thing. That's how you will win and you will escape this pandemic coming out better, bigger, stronger. And I'll say this all the time, and I've been saying this all the time, that crisis like this should not destroy you, but it should make you better. And I remember when I started out in 2008, 2007, I saw markets at 3,700 push up at that highest point. That was one of the highest times for the PSE, only to see it drop also in 1,800. But here's the thing, moments like that cost me not to shudder, but it cost me to learn, to build a skill, and deploy capital. And that's why I've learned to differentiate my portfolios na meron pang quick trading, meron pang long term, meron pang dividends, meron pang position trading, meron din outside the Philippines, because that's what will help you build those rules for it. August 2020, we are at a point where it's not as rosy, it's not as exciting as what it was noong 2013, 14, 15, 16, 17, 18, 19. We're not there, but it doesn't mean you can't make money off of it. So there, I hope you learned a lot from this. This is as raw as it can be. This is just me sharing from what I observed, and that's the main thing about it, that what happens in the economy affects sentiment in the stock market, and what we see in the businesses affects how things would normally go. So if the businesses are bad, the economy gets affected, unemployment gets affected, then it creates bad sentiment also for the stock market as a whole. So that's it for now, guys. I hope you guys got a lot. I hope that this is something that's helped you, and I hope that this is something that is different. It's more raw, it's more refreshing, but I hope this helps you trade the markets with confidence. So Marvin Germo, everything you need to know, by the way, links are down below. Books, seminars, new videos, everything else are in the description. Just click them. If you like to know more, please like, please subscribe, please share, so you get updated every time I come up with new videos about investing and about the stock market. So Marvin Germo, hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.